our accounting equation as well. If we don't make this accounting equation, and if your entry results 50,000 is equal to 50,000, debit is equal to credit, then of course the journal entry gonna be equating the accounting equation as well. And when we post it, that's it, right? So
And
cash,
here there is no liability, right?
common stock is not liability. Common stock is stockholder equity. Liability, there is no liability here.
Yeah, that's why I'm asking. There is no liability here.
Yeah, there is no, one is zero here. That's it. So see, in posting, we have referred to number one. Number one is our transaction number. So if I know that, if I'm not looking all these, not journal, not the accounting equation, if I just see this cash, my cash is debited 50,000. And how I know that my cash is 50,000 from home account? So number one, you can go through transaction number one, or you can go through the transaction which says that receive cash and issue stock. Of course, cash is debited against common stock. Cash is debited against common stock 50,000, and common stock is credited against cash, because this is the credit side, this is the debit side. Everyone understand that? Let's move forward. Now answer this question. Paid 40,000 cash for land. Paid 40,000 cash for land. So recall three-step process for journalizing.
Is both.
Analyze transaction, which means finding out the accounts, finding out increase or decrease, make the entry. In assets, how in equation life, how you can write it down?
Cash.
40,000 increase in cash or decrease in cash? It's decrease in cash in 40,000.
So it's credit.
Increase in land as 40,000. Equation is balanced, right? 40,000 cancel, 0 is equal to 0, right? So our accounting equation is cancelled. How we make this journal entry?
Is it cash?
Which two accounts are here? Oh, sorry. Which two accounts are here?
Cash and land.
Very nice. Cash and land. So which one increase and which one decrease? Cash increase or decrease?
Cash decrease.
Cash decrease. Land increase or decrease?
Increase.
Now you can make the entry. Increase in land means debit or credit? Increase in land mean increase in asset, right?
Debit.
Debit. Decrease in cash mean decrease in asset?
Credit.
So now, can you make the entry? How you can pronounce it? Land to cash. Land. You make a one tab here, one tab space here. Land to cash. How much? 40,000. And can you post this entry? Yes, you have to make a land account. This is the credit side, this is the debit side. And how you post that? In cash, cash is on the credit side, so you write it down here, 40,000. Buy home, second transaction. Land is increased, land is debited, land is 40,000. Buy home, number 2 transaction, this one. Understand?
Yes.
There we go. See? Land to cash. Easy peasy, right? Now the third one, purchase supplies for 3,700 on account. So make a 3-step process. Which two accounts are included here? At least 2 accounts are included here. Purchase supplies on account. Min. Min, can you hear me? Ping ping. Ping ping, can you hear me? Ajim,
Yes, sir. Yes.
David, Jordan.
Yeah.
Sir,
Yeah,
can you hear me?
yeah, I'm here.
Today, why everyone is quiet?
I was just replying. You didn't hear me?
We are listening to you.
Only two person I hear, Ajim and Jordan.
Yes, sir. I also said
I'm
no
here
question.
too. You didn't call my name, so I didn't say anything.
Okay, okay. It was pin drop silence, so it make me worried. What's going on? Okay, today, which two accounts?
Supply,
Of course, not supply, supplies. Supplies and on account means we're talking about accounts
liability,
payable, right? So in accounting equation, how we record it? Supplies plus 3,700. And on the other side, increase in accounts payable, which is our liability, 3,700. Right? So now, supply increase, accounts payable increase. So what are the rules? Supply increase mean asset increase mean debit. Accounts payable increase mean liability increase mean credit.
Credit.
So can anyone pronounce the entry?
supply to account payable,
Supplies to accounts payable. Answer 3,700. 3,700. Right? And you can post this as well. So let me just remove here and see our discussion here, right? Our equation is balanced, supply to accounts payable, and how we post it, simply we make a T account of both supplies and accounts payable. We are going to post it accordingly. So 3,700 against third transaction. In third transaction, what supplies are debited against accounts payable? Third transaction, accounts payable is credited against supplies. Now, answer this question. Performed services for client and receive cash for 7,000. Now, which two accounts? Of course, one is cash.
And one is receive payable or payable reception.
Performed services and received.
Retained earnings?
Which account? Retained earning is account, right? I understand that. But which individual account? So remember, this is Friday auto service. So it means perform services. So they are selling their services. It means
Sir, we will have less, I don't know, less supplies? No.
revenues. That's
Oh,
about sales. Because look at the company, Friday's Auto Service. So they are selling their services for automobile. So they performed services or they increased their sales and receive cash from their customer. Right? So which two accounts? Cash and revenues, because they receive cash. This is a cash sale, not a credit sale. This is cash sale. So that's why accounts receivable is no more here. If they say that, okay, the customer will pay us later, then they're going to be accounts receivable. So in accounting equation, how we are going to write it? Cash 7,000 and under, come on, and under retained earning, they're going to be a sales increase by 7,000. But when it comes to journal entry, we cannot just use retained earning every time. We must use its individual account, which is sales or revenue account, right? So identify the heads of account and find out which increase or decrease. Cash increase, revenue also increase. The second point is third one is make journal entry. So let's make journal entry. So increase in cash mean increase in asset. Increase in asset means debit. Increase in revenue means increase in retained earning or stockholder equity. Increase in stockholder equity means credit. So how we pronounce the entry here? Cash to sales, or we can use revenue. Everything is clear here?
Yes.
And you can post it here. So cash is debited sales by sales. Which one is fourth one? And on sales account or revenue account is credited by 7,000. Which transaction? Against fourth transaction. So let's just see that. See here. Cash to service revenue or just revenue, or you can also write it down sales. It's up to you. Right? So remember, we didn't write down the explanation, small explanation here. Why? Because up till now, I assume that you have become a professional accountant to record journal entry, because the rules are pretty simple and you can do that. I believe that you can do that. Now, perform service for a customer on account. What does it mean? That you performed and customer will pay you later. So which two accounts are here? CIP
Accounts receivable
okay.
and revenue.
Exactly.
Sell revenue, right?
Yes, so revenue and accounts receivable. Because you perform services, right? That is your sales for this business. So now tell me, what will happen to these accounts? Increase or decrease? Account receivable increase or decrease?
Increase.
Revenue increase or decrease?
Increase.
So what are the debit and credit rules? Account receivable increase mean?
Debit.
And revenues increase mean?
Credit.
Well done. And how you pronounce the entry?
Accounts receivable to revenue.
Well done. And then you post it, right? Let me just, so I'm just omitting this accounting question because I assume that you already know that. So we are now jumping directly towards performing the journal entry and then posting it to the ledger, right? You see account receivables to revenues, right? And you post it accordingly. Since we have opened this revenue previously, so in fourth transaction, we already have a revenue here. So this one, 3,000 will be posted here against 5, right? That doesn't mean that every time you have to open a new T account. No, if you already